Good afternoon, good morning, good day to all of our esteemed participants, panelists, guests. You are participating in the AGRF 2021 Summit, where in this 2021 Agribusiness Deal Room, we are in the session that will focus on innovative agricultural SME finance models. And so today, just a few housekeeping instructions. For those of you who are French speakers or would like to listen in French, please use the interpretation button at the bottom of your screen. If you click on that, you should be able to get this entire session in French. That's the only language that interpretation is available in. And I also want to encourage all of our participants that after we are done talking with our panelists at first, and we're excited for that, but we want you to participate as well. And so there will be a question and answer time when we would encourage you to use the Q&A function and send us your questions, send us your comments. And if you wish, please identify who you would like to address your question, and we will try to get to them all. We're not promising that we will get to all, but we will try to do that. And so with that, let's start. So this is our time. Have you heard that? Have you seen that? That's actually the overall theme of the AGRF 2021 Summit. This is our time to accelerate future food system resilience, powered by collaboration and driven by leadership. And today, we are going to focus in this session on innovative agricultural SME finance models. Now, why is that important? We know that SMEs are a major driver of job creation and economic activity in most developing and developed economies. In sub-Saharan Africa, it is no different, with SMEs accounting for up to 90% of all businesses in these markets. And these small and growing businesses create around 80% of the region's employment, establishing a new middle class and fueling demand for new goods and services. To enhance productivity and ensure sustainable growth in Africa, it is vital to provide smooth financing to SMEs. However, lack of access to finance is a critical barrier to growth for SMEs globally. Recent advances in technologies, including distributed ledger technology, cloud computing, and artificial intelligence, are becoming means of offering faster, more convenient, and more cost-effective financial services. But let's look at what's happening now. The COVID-19 pandemic, this global pandemic, has had a devastating impact on SMEs, with millions of small businesses being at risk of closing permanently if the crisis persists, while others are suffering massive losses and laying off many of their staff. Speed is important to provide the needed support during this crisis. Therefore, the use of digital technologies is proving to be critical to help SMEs during these unprecedented times. And so in this session, we are going to have a conversation with leading digital innovators and financiers and industry leaders on possible agricultural SME finance models that can catalyze agriculture industry growth. And so at this time, I want to introduce you to this amazing group of panelists that we have. This is a distinguished group of knowledgeable experts who are here to share with us their knowledge and experience. We have, first of all, Adesua Ifedi, who serves as Africa's Senior Vice President for Haifa International, where she works to end hunger and poverty while caring for the earth. We also have Nyakundi Ongubo, who is the Assistant Director, External Trade at the Ministry of Industrialization, Trade and Enterprise Development, Kenya.
How are you?
Well, thank you. We also have Sriram Bharatam, who is the founder and chief mentor at Kuza Biashara Limited. Shri is committed to supporting youth, women, and micro-entrepreneurs from low and middle-income countries by helping them to learn, connect, grow at scale on their own terms and pace. We also have Mutiso Dambuki, who's the country manager, FACS Kenya. FACS stands for Financial Access, Commerce, and Trade Services. And this is a supply chain finance and factoring company that seeks to unlock working capital for SMEs with a bias to agriculture and the manufacturing sectors. Next, we have David Davies, and he is the founder and CEO of Ag Unity. David
Linda, did we lose Listra?
Yes, I think we lost her.
We still have Nixon.
Yes. Let me just take it from here. As Lister was saying, Davies is the CEO of Ag Unity, which is run from Australia, and he has a lot of experience in working with working with farmers. And so to welcome every one of you to this meeting and ask that we fully participate, like Listra had said earlier, that we are going to have a panel session where our panels will be able to speak to us and answer some questions that have been prepared to be answered by them. And then thereafter, we will then give a chance to the team or everyone else to kind of come and ask questions so that we are able to run this session in a way that we'll be able to encourage full participation of everyone by the end of the day. We hope that we will have the learnings out of this session and that we all will have benefited from the session even as we start. So I think to be able to kick us off, I will ask Nyakundi. Nyakundi, you work with government, and we know that the government of Kenya have set up the Kenya Macro, Small and Media Enterprise Competition project in collaboration with the World Bank, which has led to diversification of SME funding. Why is it important? Why did the government see it important to form a special investment fund for SME?
Thank you.
You can hear me?
Yeah, we can hear you. Thank you.
Okay. Thank you so much for this opportunity. I think my boss was away, so I'm basically presenting him and making views from the team. And we'll be able to give answers accordingly as to how we want to be here and forward. Basically, maybe I can read these remarks,
Okay.
brief remarks, and then from there we can have the discussions, maybe 2-3 minutes.
All right.
I'm delighted. These are the remarks for the Chief Administrative Secretary, Honorable David Osiani, State Department for Trade and Enterprise Development. Distinguished guests, ladies and gentlemen, good afternoon. I think it was good afternoon. I don't know, maybe others it could be in the morning, depending on where we've joined from. I'm glad to join today for the discussion on digital solutions and the finance 2021. The platform brings together SME leaders, both in government and private sector, to discuss issues of common interest in financial technology to stimulate digital government and the digital transformation. Digital finance is proving to create opportunities in terms of having financial inclusion, gender equality, and inclusive economic growth. In Africa, the fintech wave is built on mobile proliferation, where digital financial tools such as mobile payment systems provide a gateway to greater economic security, empowerment, and opportunity, even where internet technologies are in the formative stages. In Kenya, for instance, it's seen as a clearinghouse for financial inclusion policy solutions that have worked and have been tested and can be duplicated in other developing countries and emerging economies. Fintech innovations in Kenya basically was started off through the Safaricom M-Pesa money transfer service, which functions like a limited mobile bank, but without the need for an internet connection. The whole system runs on technology similar to text messages, where M-Pesa combines Safaricom's mobile infrastructure with an agent system. Safaricom stores the balance and the customers go for can go to one of the 110 agents to do various transactions that they intend to be. The other innovation in the fintech sector is the Equitel. This is a company, a mobile virtual network by Equity Bank, who partnered with the Airtel to offer banking services to throughout the country. And then when it started, it captured almost 22% of mobile market in just 5 years in Kenya. Some of the other growth areas include the first generation basically was the M-Pesa, the money transaction platform that started far back in 2007. The second generation is where the banks got on board, started using the fintech. Then the third generation is the commercial banks now providing credit using mobile fintech. The growing coming up generation is where the diaspora are able to send or make remittances from wherever they are home to finance their activities at home. The latest one is collaboration between financial services to grow the product range in the fintech sector. I think those for Kenya, that is where we have had a growth in the fintech sector, and It has provided opportunities for the youth to come together and work innovatively to create jobs in the SME sector. And as it is known in Kenya, the SME sector is one of the fastest growing, but a very risk area. So the fintech is trying to bring the youth, women together so that they can be able to sustain their businesses through innovative use of the financial services that are provided by both banks and the telecommunication firms, particularly Safaricom and Airtel. The innovations are primarily hinged on a vibrant, diversified private sector-driven economy, which is endowed with a well-educated and entrepreneurial workforce and a relatively high level of business and sophistication. This is coming from the advanced institutions, including the students who are coming up out of the middle-level colleges in Kenya. The country has also excelled in the information and the communication technology business incubators with hubs such as NILAB, iHub, ILab, cropping up over ICT innovations, one-stop facilities, mentorship, and funding for the whole sector.
So, Ngubu, I really appreciate that. And I also have to apologize to our audience because I actually lost, we're talking about technology and I lost all my ability to communicate. So now I've come back in using my phone. So I want to thank you so much, Nixon, for stepping into the gap for me. And thank you, Mr. Ngubu, for that. But can you just tell me, Nixon, are we in the round robin or because I missed sorry?
Yes. Actually, what happened is that we were in the round robin, and I'd asked Nyakundi for the first question to government, and he was just, he was briefly telling us what the assistant minister wanted us to share from his speech. But that speech is, you could summarize so that we go to the next speaker, Nyakundi.
Yeah, and if I could also help you with that,
Right.
Nyakundi, because what I can do, because I do want to come back to you to get some more specifics, and I can actually come back to you as well to ask that question on some of the specifics, especially to some of the particular SMEs that might be, really interesting for us to look at. I think one of the things that I'm not sure if we've addressed, but it's going back to the very basic question, why is it so important to have innovative financing models for agricultural SMEs? And so, we've talked about the importance, but I want to know, why is it so important? So, Motiso, let me just turn to you. We all agree on the importance, yet we know they still receive a disproportionately small share of the credit from. But why is this? And why is it so important for us to address this topic this morning? So, and I'll come back to Mr. Ngubu to just share more details on the government's program, which is so important for us to discuss today.
All right, thanks for that. I think you can hear me?
Yes, I can hear.
Thanks, Lisa. Yeah, why is this topic important this afternoon? One, I think the world is changing, so we have no choice but to move with the new trends. And what we are seeing is there's a lot of technology-driven kind of living, and we cannot afford to leave the SMEs and the financial institutions behind. So from where I sit, I think that is critical. That people need to appreciate that things have changed and we have no choice but to also adapt to the changing trends. And of course, it's also a very good opportunity for us to ask ourselves, those who have not been remembered previously because of the type of conventional lending, traditional lending, so to speak, that we've had, how can we bring them on board for purposes of making sure that you also have a positive impact on the economy.
Great, thank you, Motiso. And let me just turn to Samira. Samira Adebiyi, Managing Director of Apex Investment Limited. I want to just ask you, Samira, now, how can we improve traditional lending using new technology and big data? How can we do that?
What needs to be done? I mean, if we look at what's happening now, most banks are turning to big data and analyticals. They're using artificial intelligence to gather information. So if this opportunity is open to them, they can identify different patterns and risk assessment of the SMEs who come to them for financing, and to give them, it will enable them have more widespread data to enable them take decisions and to make them more efficient. If I just come back to Nigeria, in Nigeria, what we do now with data, we have interconnectivity amongst the banks through the BVN system that we have in Nigeria. We also have access to a credit bureau, which will give us a track record of what the SMEs are doing. And most of the issues that banks have is that they do not have a track record. So once you can log on into the credit bureau and see what they're doing, and it gives kind of transparency, and it will enable take the more efficient and more timely decision for financing the SMEs.
No, so much for that. Following, I find out, when we talk about emerging technology and innovative business models. Now, how can those improve SMEs' access to financial services, boost their long-term growth? Shri, do you want to take that one for us? How can we use these emerging technologies?
Yeah, Listra, can you hear me okay? Yeah, thanks. So I just want to set the context here. While we say SME at large, I would want to speak from my own experience of dealing with real micro and small farmers and the small traders who work with them. In the context of today's world, like in Kenya, speaking from my experience, the public sector extension system today is very weak. It's about 1 to 5,000. One public sector extension worker is serving about 5,000 farmers, while the recommended ratio is 1 to 400. And service providers like finance providers are finding it extremely hard to reach and serve them. Example again, to give a loan for a $20 loan, the cost of serving that for a traditional bank is about $30, which is just not viable. And an average Kenyan is about 60-year-old, while an average youth is 19-year-old. There's a massive intergenerational crisis and growing unemployment. So one of the ways in which we are using emerging technologies and innovative business models to serve this is by engaging unemployed rural youth at a grassroots level and grooming them as independent agri-entrepreneurs. We put them through something called rural entrepreneur development incubators. Without them leaving their places in the rural setup, they are now using the technologies, the digital technologies, to get incubated as agri-entrepreneurs, where they learn the skill, understand the business of agriculture, and each one serving approximately about 200 farmers. With this network that we are creating across country, what we are also doing is we are using a digital platform called One Network. We are integrating all the service providers. That way we are reducing the cost of acquisition of a customer, reducing the cost of serving of a customer, and now creating a private public philanthropy platform model. We are leveraging the strengths of all the parties in the ecosystem to see that we are able to land a low-cost credit to the farmers and also ensure that the quality products are reaching them. I don't think this would have been possible without the use of all these emerging and exponential technologies that we have today.
Thank you, Shri. That you brought up a very important point as you talked about what the extension is, what that system within Kenya looks like, and how, of course, you're using technology to bridge and to provide information and to make it cheaper for these MSMEs to actually access finance. And so I'm going to go right back to Mr. Onguvu, because one of the things we recognize is perhaps, the importance of policies and the regulatory environment. And so I wanted to ask you, why is it important, you think, to design an appropriate regulatory environment for fintech? And how are the policies that would support fintechs important in that context, in the Kenya context? Can you speak to that for us, Mr. Onguvu? Okay, I'm not sure if we've lost Mr. Onguvu there, but I want to open this question up then until until he's back on. What's your for the importance of looking at the regulatory environment, look that the government can provide, and the policies to support and improve new technologies for financing SMEs?
Basically, it's the main challenge that created an opportunity for the government to think of coming up with the policy is that there was a proliferation of various projects and startups and innovations that came from the youth. So the government came up with that project to assist the youth to do capacity building for them in terms of going into business. Then after that, they were able to benefit from the project that is supported by the World Bank. And it's still building up capacity. The government currently is working on a fintech policy that will help support and encourage innovation in the fintech sector and expand, bring more financial inclusion into the economy, the economic development of the country. Basically, this emanated from the Safaricom or the M-Pesa project that was started in 2007. In the process, more youth, more young men started coming up with more projects. So it became a business. That's where the government started looking at how can it create an enabling environment that is going to help these businesses that are coming up, or these ideas that are coming up, to be financed, either directly from the long-term finance from the banks, or short-term package like the one that is under the World Bank.
Okay, thank you so much for that. One of the things that we're thinking about here as we talk about this access to finance, use of technology, we know, for example, that still SMEs largely, one of the main issues they mention as a constraint to their business is always access to finance. So why do most SMEs still use bank credit rather than alternative financing tools such as equity financing, corporate bonds issuances, and mezzanine finance, even though bank credit is not always the most appropriate form of financing? Adesua, do you want to address that for us? Why is it that SMEs and MSMEs still turn to the banks for credit?
Yeah, thank you for that question.
Wow.
You can hear me, right?
Yes.
Great. So, why do they turn to it? I think obviously if they had another choice, they would not be paying 25% to commercial banks or above 40% to other micro lenders. But they have to turn to that because the alternative is really not available to them. So two critical things that impact access to finance, right, for SMEs in this space. One of it is accessibility, the other one is affordability. So when we talk about blended finance and all the different options that it provides, it's affordable, but unfortunately the reach for that kind of innovative finance is just not where it should be with the people that really need it. And I also want to tie this to your first question that you said, why is innovation important? I think we're not throwing tech in here for tech's sake. I think the reason we are leveraging tech is because we have to think out of the box to urgently address this challenge of access to finance to the group of people we refer to as the missing middle or the hidden middle, right? The SMEs at the upper end have access to commercial financing. And then when you talk about commercial financing, honestly, less than 10% of commercial financing actually goes to SMEs in the agricultural sector. So even those who are accessing it are way smaller than those who really need financing in this sector. Now, these same SMEs, unfortunately, are too big to access microfinance as well. And so the need to innovate for them is something that is very, very important. Why? In Africa today, 80% of employment is created by SMEs. And many of these SMEs are closer to micro than they are to the big, comfortable SMEs who have all the criteria required by the commercial banks, right? In agriculture, however, agricultural SMEs are seen as twice as risky as SMEs in every other sector. So now they have this double challenge, and of course, returns on investment is considered to be lower when compared to investing in other areas. So with all of these issues sort of almost working against those who are trying to sort of connect our farmers to the market, the importance to innovate and think out of the box is critical. However, blended financing is growing. Access to blended financing is growing, but we just have to have more people embracing these new ways of financing the SMEs in this sector. Now, the critical thing is that with blended financing, we have grants, we have opportunities to equity, we have also the first loss guarantees and providing guarantees to make them to de-risk the environment for lending. Whilst these instruments are available, there's still a lot of things that needs to be done for them to be available to those who really need it. One of the critical things that has to be done is there has to be a better understanding of the ecosystem that supports these SMEs and a better understanding of the players and the role that they play. It's almost like a tag team, right? Taking them away from microfinance, blended finance starting off with granting, then moving that SME to a place where the SME can get a first loss guarantee that de-risks that SME and positions that SME for either equity investment or for commercial lending. The role, of course, of technical assistance is also required. Now, who are all the active players in this ecosystem? That has to be really understood. But I think most importantly, blended financing has to be, we have to create a framework. We have to begin to really understand the different stages of financing that is required, the different types of SMEs, where they play, what services they're providing, what their pain points are, and the best way to also support them and meet them at the point of where they are at. This with also a strong understanding of the local footprints, because most DFIs that are providing blended financing now need to connect with the local players also, because the local players are the ones who really understand the footprints on the ground. So we just talked about KUSA and the work that they're doing. We look at organizations like Pula that's trying to de-risk agriculture by providing a role that will add to the risk profile of the various players in the sector. We have to back them out. We also have to understand the role that they play, and that will contribute to creating more.
Is that mine? Okay, thank you so much for that. And with that, let me turn to just talking a little bit more about the technology itself. And so, David, can you tell us, how is new technology? Talk to us about the technologies themselves, like blockchain. How are those reshaping trade finance, money transfers, and other SME activities?
Maybe we just take it back just a tad before that. The main issue that we see developing world farmers facing, African farmers and all the other nations we work for, is there's very much a haves and have-nots. The slightly bigger farmers have better information. They can use, proper computer systems, and they're in a position to apply for a loan. A very small farmer might not have no access to a computer, nothing useful on the phone. They can't prove their income. They can't prove what land rights they've got. They can't prove any of that. And that's where the newer technologies are coming in. And it's probably not, your advanced ones like cloud service. Like, your simplest solution is just your mobile phone. The problem is mobile phones and the solutions on them are typically made for the much larger farmers. And, it's roughly 500 million farmers around the world that are in that really small area where they only have access to often only feature phones, often very limited access to technology. And that's what's really driving their access to affordable finance.
Thank you for that. I appreciate it. And you bring up a very important point about maybe when we think of some of the AI and the blockchain and so on, perhaps those are not the first things that we can use to improve access to financing for SMEs, but just look at the smartphone that's actually in their hands. And so I want to turn also to one of our guests who actually provide alternative financing and alternative models for actually addressing who can actually receive funding. And so what maybe if I could go back, Mutiso, can you speak a little bit? What is your experience, Mutiso and Samira, your experience actually on the ground with using new technology to support MSMEs, SMEs? Can you give us some examples of how your use of technology has actually either helped you to qualify people who would not otherwise qualify for credit from banks or to provide small loans to farmers?
Thanks, Lisa. So if you look at traditional lending vis-a-vis what you're trying to do, you realize our part of the world is actually data-driven. And the advantage of data is you are able to see what you want to be able to see in as far as traditional lending is concerned. Because in most cases, when an SME today visits the bank, they're likely to be evaluated based on the bank statements that they have. But if you come to supply chain finance, where we take advantage of IT platforms, then we begin to look at different ways within which you have been able to automate the processes, whether it is from an e-invoicing perspective, or even payment collection perspective. And that creates the kind of security that would really work for us, which is not the case in as far as traditional lending is concerned. So what technology has done is actually to help us support the SMEs who were not visible because it was a little bit difficult to tie the loose ends together. So technology comes in, it ties the loose ends together, and all of a sudden you can begin to realize the risk is not necessarily so much on the SME that looks very small to banks and may not even have the normal security that they need. And the risk profile changes, and you begin to ask yourself, who are the key players in this? How is the payment process like? How is the invoicing process like? You control that environment using technology, and you support SMEs. And I mean, we have countless number of clients that we've been able to support, including guys who are supplying vegetables to the local supermarkets, who couldn't actually access financing from the mainstream banking. Why? Because they don't have security. And so they were deemed to be very high risk and quite small. Yeah.
Samira as well. Now I'm going to tie in some of the questions that we have received in the chat. And so many people are saying, as we look at these rural areas, these rural areas, they lack internet, for example. And how, for example, are we going to reach these farmers in the rural environments? And, how then mobile money and could be used to provide low-cost solutions for missing data, where, for example, no smartphones are needed. So, Samira, as you address this question, can you touch on some of these, and then we're going to open it for our other panelists as well to respond. Shri as well.
Okay, thank you. I'll try to answer the question looking at what we are doing at Apex. Okay, so for us, we had looked at the entire value chain and seen where the pain points are of all the farmers. Now, across the value chain, not just the farmers. So for the farmers, starting with the farmers, obviously they need financing, but as everyone has said, there's no data for them. So what we did is that we got some staff that we call the FEOs, as field extension officers, who are locals of the environment where we want to work. So what they do is that they talk to the farmers, find out what their needs are, if it's financing. We have a platform where they can register them, because like we said, they're not all tech savvy. So they go with their smartphones or with their tablets to register those farmers, get what their needs are, then bring it back, and we try and process a loan for them. And because we know, like Leticia has said, that most of those farmers do not have collateral, which most of the mainstream bankers would ask for. We have devised a product called the input system, input notes, which we give to the farmers, and repayment is done with commodities in which they trade in. So we have addressed two things: technology. Well, for the start, this is being done by our field extension officers. Then the financing we take commodities as the collateral. So we bridge that gap. And if we move further up the chain to the buyers and the sellers, we have a platform called Comex, that's COMX, where buyers and sellers can go on board and buy and sell. We'll match them, and we're going a step further. If you're buying on our platform and you do not have enough, you see an opportunity and you do not have the finance, we could give you a quick loan within 2-3 hours for you to catch up on that opportunity. So whilst we have not addressed totally the technological challenges of the farmers, and we have devised that means where the field extension officers can assist them to either operate the tablet if we have it, or a smartphone.
Thank you very much. And I'm going to open this up. Shri, I don't know if you ask you.
Yeah, so Listrag, I would like to take that question. It's a very interesting question, very practical in the African context. So a couple of things that we have done. What we realized is most of the smallholder farmers who are out there, very far away from the big cities and not connected to the internet and also the power grid, how do they even get access to this? So while there are a lot of technological and digital innovations happening, we, as Kuza said, we got to humanize this technology. The first and the foremost thing that we did is we have digitized 42 agriculture and livestock value chains by producing short, bite-sized video content in 10 languages. Now, the video content is available, but how do you make it accessible to the farmer? This is where the agripreneurs, the youth agripreneurs I was speaking about, each one serving about 200 farmers, move around with a small device like this. I don't know if you can see it now. This is the size of my palm. Okay, and because of the background, you're not able to see. It's a micro projector, which is self-powered micro projector, with which you are now able to go closer to the farm, engage farmers in groups of 15, 20, and educate them. And the most important piece is trust is the currency on which we are operating. And most of the smallholders don't trust large companies because they don't see a face there. An agripreneur becomes an interface for them. And that's how they are now able to ensure that some of these digital technologies and the content and all of these that we are hearing, we are talking about it today, are made available to them. It's more like an assisted hand-holding system where we are not only providing advisory, but also facilitate access to credit, access to quality inputs, and most importantly, access to market. And that's how we are revolutionizing this.
Thank you very much, Sri. The point you're making, and Samira before you too, is an important one. And that is, as we consider technology, the technology sometimes is allowing us to actually serve those communities better. It may not be that they themselves use the technology, but that the technology and differences in technology, as you mentioned there, for the video content that is, on a self-powering device, or for example, that the buyers and sellers can use, or, those are the technologies that allow for better servicing to these micro and small enterprises that allow them to actually access finance. And so, Adesua, I see you.
Yes. Yes, I'm just itching to jump in, but you hit the nail on the head, really. Because when we talk about big data, for example, we are partnering with several organizations, Ignitia that provides weather forecasts for farmers, Pula that is providing insurance. Now, these organizations gather big data. And what this does is that it provides enough transparency for financial institutions who otherwise are shy to invest in the sector because of the risk profile of the sector to become more willing to do that. Now, we also have to understand, like you rightly said, it's not just about leveraging technology alone to provide access to finance, but it's also leveraging a technology to gather the data that is required to create transparency or visibility in a sector that is usually perceived as quite opaque. And then this data also therefore strengthens the credit rating or ranking of these farmers and farmer cooperatives, enabling them to sort of be put together and therefore be profiled better and be reached with finance. I can't stop talking about the need to extend, access to insurance to farmers. When the biggest problem with agricultural financing is risk. And we have to be able to address the perceived risk that the SMEs and the farmer cooperatives and the farmer-owned agribusinesses have, so that we can all begin to make them more attractive to the financing sector. And so I think that it's very important that every form of technology must be compatible with the environment where we're working, must also be suitable for that environment where it's being worked. But most importantly, there has to be a combined effort to address all the issues that are hindering access to finance to the communities that we serve.
Absolutely. And I know we have about 5 minutes, and there's something that I want to throw in here. And Mark says insurance is the elephant in the room. Listen, one of the things that we need to address, and I want to throw this out just quickly for your thoughts. In the agriculture sector, we know that there are a lot of females who are SMEs, okay? Micro and small enterprises. A lot of agriculture is done by females along the value chain. We talk about SMEs having difficulty to access finance, but think about the female SMEs. That's also another problem. And then we have youth. Is there anything that the technology enables us or perhaps allows for us to bridge that gap that we see for women-owned and for youth-owned agriculture SMEs and MSMEs? Dave? Yes.
Yeah, I mean, we work with both those groups in very large numbers, and there's two distinctly different problems there. The first one, women farmers particularly, their big problem is with cash society. We work with a lot of coffee and cocoa farmers who tend to have large crops. When a woman's bringing a crop into the village, everyone knows she's coming back with money. The big problem, because women are such great savers and great investors in their family and community in general compared to the men in our communities, the problem is when they come back with cash, that cash is vulnerable. The risk of getting robbed on the way home, but they're also a risk when they turn back in the village, people turning up and wanting, I want to borrow some cash. And so turning them into cashless society makes a big impact on women. It's one of the things we do extensively. The youths is a very different problem. Youths tend to move away from the rural areas because it's not seen as an exciting, interesting job anymore. So the key that we find with youths is to have something that is modern technology, give them a way of feeling that farming is no longer this boring backyard professional that their grandfather did. It's something exciting. They can get information off the internet. They can get, they can be doing things in a modern way, and that attracts youths back to the farming environment. So there's two different problems, both addressed by giving them, firstly, offline access and the ability to record cash or hand over their crop and get paid later. Have it transferred into a bank account. That's the key to women. With youths, it's all about it being something exciting, something a little bit new. When we roll out into a village, most of our ag champions, we call them, the people that help the other farmers, they're always the youths. You'll do a demonstration in a village and the first people to stick their hands up to say, like, I want to do things. They're always the young people, often with the smaller farmers. They're looking for a way to excel and show themselves, and giving them the opportunity to be an expert in an area helps them stay in the village and become productive members of that community.
Thank you so much, David. There's so much that can be said, but that we can continue to talk about. But as usual with these discussions, we tend to run out of time. And so I want to also, at this point, just pause and say, there's something very important. There are two very important announcements that need to be made here. And so I'm going to just pause and hand over to Shri and to Samira and for your announcement. Then we're going to come back and close out with one final question. So quickly, Shri, over to you.
Listra, thank you so much. Really enjoyed these conversations today. So as Kuza Biashara, we are working closely with the World Bank, the UN World Food Programme, Farm to Market Alliance, and AGRA. We're creating a common pool of agripreneurs to support 1 million farmers network in Kenya. And the model is unique because we are putting together what we're calling as a PPP and a P model, a public philanthropy private platform, where the public sector is driving the policy, philanthropy sector is supporting the incubation of these agripreneurs and also providing innovative financing. And that's reducing the cost of acquisition of customers, that's farmers, and private sector driving the economies of scale. And we are capturing all of this on one network, on one single platform, which is what we are calling as One Network. And I'm also happy to announce that between ourselves and Haifa International, we're also bringing our strengths together to see how we can leverage the existing network of programs Haifa has across the continent, 11 countries, and see how we can make this 1+1 level. Adesua, you would want to add to this?
Adesua, did you want to add? Okay, I know, I believe we might have lost Adesua because I noticed her connection went down. We're having some technology issues this morning, but Shri, thank you so much for that announcement. But before we close, because we're right on our 4-minute marker, I want to just allow for each of you to just mention in your own words, someone mentioned, is innovation necessarily technology? And this person was saying, look, there are lots of innovations that are not necessarily new technology. But as we close out, in the context of COVID-19 and what we're seeing is happening, SMEs and MSPs in Africa, what one thing would you say in terms of technology, whether it's for use by the farmer or for use by the service providers, is the most important thing you think to really enable MSMEs and SMEs to really get back on their feet with regard to access to finance in the coming 12 months? What one thing, one technology focus, one innovation? Okay, so I'm gonna start with Mutito, and then I would go to Samira, Shri, David.
Thank you. So is technology innovation necessary? Yes. Why? It makes those that are not visible, and then it provides technically an equal platform for all to play. So I would say 100% it's a necessity.
Okay, thank you, Mutiso. Over to you, Samira.
Yes, I agree with him. Technology and advancement is important because it opens the opportunity, like we said, for visibility, for transparency. It gives opportunity for alternatives to traditional form of doing business, not just financing. So yes, it's very important. So the most thing that, and the thing that is most important for us is having alternatives to the traditional methods of financing for SMEs.
Perfect. Thank you so much, Samira. Over to you, Shri, and then David.
Lisra, I have slightly different view on this. I would say most of us, or especially most of the small business owners, don't know what they don't know.
Mm-hmm.
Now, in whatever form and shape, when you make them understand there is a better way of doing it, they embracing it is what is innovation for me.
Okay, great. Thank you so much. And lastly to you, David.
So I'd say the key is making, if you're going to deploy technology in specific markets, it's making it relevant and useful to that market. So, you know, your mobile phone is designed for people in developed markets because that's who pays the most money for them. And to make that relevant in a smallholder farmer community, you have to deal with things like the problem we saw before of making them work when there's no connectivity. So which is actually quite simple to do. It's just you have to redesign the phone to do that. And so there's a lot of things that you need to rethink about a solution to make it relevant to your particular market. And it's a really sad fact that because very small, SME, smallholder farmers don't earn a lot, they're not seen as a big opportunity, although there's 500 million of them. They're not seen as a big opportunity, so they don't get the focus of the technology providers as much as they really should.
Great. I think that's a wonderful point for us to end on. Thank you so much to my wonderful panel, to you, David, to Sri, to Samira, to Adesua. It's been a wonderful Mutiso. It's been a wonderful discussion. Thank you so much to Mr. Ogubu as well. And with that, we're going to close because we're right on the 4 o'clock mark. Thank you all our guests who joined, and to all of you who put your questions in the chat. Thank you so much and have a wonderful rest of your day.
Thank you.
Thank you.
Thank you.
Thank you. Bye.